Hello everyone and welcome. My name is Tim, trader at the Camp Compound, and it's time for our crypto analysis. Let's get right to it. In front of us we have Bitcoin on the 1-day chart and we see a very important candle here today. Bitcoin, as you can tell, has had a very strong rally. This is a multifaceted thing, but partially because there is some stimulus coming in from the United States to save a bank, which generally trickles through. That also means that people are expecting a less aggressive Federal Reserve, lower rate hikes, that kind of idea. And there's some other fringe stuff that we don't need to get into right now. What we do need to get into is this candle right here, because what we see is that Bitcoin, for the third time in a, well, second time in in a relatively short period, and third time in total, has hit this 25,200. This is a major resistance. As you can tell, this whole area is very important to Bitcoin, and what we see is that we pierced through for the first time since we broke under it. We pierced through properly and now we are back under. If Bitcoin manages to close just above this support, we would have a topping tail, which generally shows that the market is about to turn back down. So it is very important that Bitcoin can kind of hold its ground between these two levels so that we might bounce off of 24,200 and still continue onwards. Because from this point onwards, I'd say that there's a 40 to 50% chance of breaking through, and if that is the case, we would fairly quickly, like we already saw today, we almost hit that resistance right here at that 26,700, but there would be a fairly strong chance of immediately moving through towards here, this 28,700, 800, kind of this right here. That would be the next area, that could walk all the way up to 32,000. That would be the next major zone of resistance, as we can see here in, well, May and start of June 2022. That would be the main area. We also have a lot of people who started buying in around this area from the last couple of years, so that means that there's a very good chance that all those people who are then break even will look to get out after having gone through this grueling point right here. So be aware of that. If we do hit the 30k, then we might just be in for a very rough rejection. Could bring us all the way back down. So don't let the fear of missing out get to your head. Don't let the gains get to your head. Keep calm, keep cool, and keep compounding. But we're not at the end of our video yet. So that is what we're seeing here in Bitcoin. That is kind of what we want to keep an eye out for. If we can close today above 25,200, we would have to wait tomorrow for confirmation, and then we can go fairly quickly. Otherwise, if we do see a rough rejection, so kind of under that 24,700 kind of, then we will probably move back down to test this trend line again. That is what we're currently seeing. Then, if we move on to Ethereum, we kind of see a similar thing, but Ethereum is holding out a little bit better. So what we see here in Ethereum is that it has broken through its previous resistance and is still pretty well above that, and the candle isn't just not quite under half yet. So it hasn't completely given back most of its gains of today yet. So that is fairly impressive. Also decent continuation depending on how we close, but we do still see that this area up until 1780 is pretty rough for Ethereum. That's kind of similar to Bitcoin's 25,200, as we can see here. So this whole area between 1700 and 1780 is a resistance zone for Ethereum, and we might still get rejected. So despite the fact that we've had a great rally, we should not lose our heads just yet. Especially Ethereum has been going very hard for 1, 2, 3, 4 days. So a cooldown would not be strange. Preferably, we see a cooldown going this way, here sideways, so that we can build up a foundation and then continue onwards towards about, let's say, 2000 would be fair. That being said, the Ethereum Bitcoin chart is also looking pretty snazzy at the moment. We went back towards this trend line, we pierced it, but we came back above and are now looking at a potential bottoming tail. Also, lowest point in the last, let's say, 30, 60, quite a couple of candles, so it's very strong. And we do see that maybe we have some hours left, like 4 or 5, but we might just see volume kind of coming down, which could mean that Ethereum is about to go into relative strength mode again. As you can tell, we had an Ethereum Bitcoin there position that we started right here at 0.0689 approximately, and we are now waiting for it to move back up, especially in bear markets. Using Ethereum to increase the amount of Bitcoin that you have is a very good idea, because if we were to just move back to the top of last year's range, or not even the top, but just kind of the high area, you would have from this point on 20% more Bitcoin if you sold up there. And if we do really well the next bull market, then we could even hold it up for even more. But we will see how that goes step by step for now. This would also mean that altcoins would be relatively strong to Bitcoin, but that does not necessarily mean that they will rise in price, only if Bitcoin can stay stable and also consolidate sideways. So that's what we're currently looking at in the market. There's a couple that are doing very well, like DYDX. It is almost back to its downwards trend line, but since Bitcoin is still looking a little, we're not really sure if it's going to crash back down because of this candle that we're currently seeing. So I wouldn't short it if we get here. I would want to wait and see what the market is doing and not get caught with my pants down, to be sure. Because if we pull this down a little bit, like that, then you can see that there could be somewhat of a bull flag with just a bit of a deviation below. So it's not perfect. It's not great. Better to wait. Furthermore, we do still have a position in Polkadot, and that is currently up about 9%, topped out at 12%, doing quite decently, but now you see that it hit its resistance zone and is retreating a little bit. So that is basically the main point in the market today. We've hit very high milestones and are now kind of retreating a little bit. The market does not seem to have the strength to completely pull through. Might also be because of the FOMC meeting next week that people are still a little bit skittish, but the inflation numbers that came out today were positive, so it's a bit of a cross current going on, and in cross currents, no swimming. So we will be careful, and slowly we have closed out some longs and are now opening some shorts slowly. For instance, in Ethereum itself, here we shorted at 1722, also with the idea of that it is not looking that strong currently, Bitcoin is not looking that strong, and also we have this kind of megaphone pattern, which is generally not a bullish one. This is generally a bearish pattern, and if we have a look at, for instance, our RSI, we also see that there is still a fairly major bearish divergence. Despite having broken the previous trend, it is still not a bullish sign, meaning that there is a good chance that we will still hit that 1500 again. So keep that in mind. And then Solana we cancelled because it didn't hit. Unfortunately, it missed us and is now up significantly from where we wanted to enter, which was about here, I believe. It's like, yeah, I'm not sure actually, but it's definitely up quite far from our original idea of an entry. So unfortunately, that is not quite that. For the rest, there's nothing too exciting to mention. Currently, the market is just doing quite well, and be sure not to be caught with your pants down if the market does decide to reverse. And now you have a bit of an idea of what you can expect over the coming days and possibly weeks. So thank you so much for your attention. I will see you all in the next one. And as always, don't forget to keep calm, keep cool, keep compounding. Bye bye.